Students, you saw how price reacts to patterns like triangles, flags, and wedges. But what if you could identify key bounce or breakout zones even without a clear pattern? In this lesson, we'll explore how moving averages can act as dynamic support and resistance. This will help you make smarter entries and exits in real time. Welcome to Day 18, Lesson 4. Before we go deeper, remember that many of the tools we're discussing in this lesson are also covered in our MMU Quick Start Guide. That includes chart patterns, indicators, candlestick examples, and key trading terms that help make these lessons easier to follow. If you haven't downloaded it yet, you can grab it at mmu.freeguide.com and keep it nearby as we continue. Watching on YouTube? Subscribe now so you don't miss free previews of upcoming lessons. Unlike static horizontal lines, moving averages shift with price action and create dynamic zones of support and resistance. Instead of staying fixed at one level, these areas move as the market moves. Traders often watch these zones closely for potential bounces, breakdowns, or breakout opportunities that may signal continuation or weakness in the current trend. When price approaches a rising moving average from above, 1, the moving average may act as dynamic support and help price bounce higher. Conversely, a falling moving average can serve as resistance, 2, when price approaches from below. Traders watch these reaction zones closely because they can provide insight into trend strength and possible continuation. Knowledge check. A rising moving average often acts as resistance, while a falling moving average usually acts as support. Is this statement true or false? You have 10 seconds to record your answer. If you ever need more time, feel free to pause the video. The correct answer is false. A rising moving average often acts as dynamic support when price approaches from above, while a falling moving average can act as dynamic resistance when price approaches from below. Traders often use multiple moving averages together to create dynamic zones of support or resistance. For example, the area between the 10 moving average and the 20 moving average may act as a reaction zone where price pauses, bounces, or reverses. Instead of focusing on a single line, many traders observe the space between multiple moving averages to better understand trend strength and market behavior. This zone acts as a flexible area where price may bounce, pause, or reverse direction. If price pulls back into the zone and reacts positively, it can signal a potential entry in the direction of the trend. However, a strong break above or below the zone may suggest that momentum is weakening and a possible trend shift is developing. Traders often watch how price behaves inside the zone before deciding their next move. Knowledge check. You're watching ABC's chart. Price has pulled back into the zone between the 10 moving average and the 20 moving average, then formed a strong bullish candle bouncing upward. Both moving averages are still sloping up. What would be the most strategic trading decision at this point? Is it A, close all positions because the trend is unclear? B, do nothing and wait for the moving averages to cross downward? C, enter a long trade because the moving averages acted as support and price bounced? Or D, enter a short trade because the bounce is likely a trap? You have 10 seconds to record your answer. The correct answer is C. Enter a long trade because the moving averages acted as support and price bounced. When price pulls back into a rising moving average zone and forms a strong bullish reaction candle, traders often interpret this as a continuation signal within the existing uptrend. The upward slope of both moving averages also suggests that bullish momentum may still be intact. Remember, moving averages are not foolproof. Price may overshoot or undershoot these lines before reacting. To make smarter trading decisions, Many traders combine moving averages with RSI to measure momentum, candlestick patterns for confirmation, and support or resistance zones for additional context. Using multiple forms of analysis together can help filter false signals and improve the quality of trade setups. Knowledge check. You notice that price is consistently trading above both the 10 moving average and the 20 moving average, while RSI is holding at 66.33. The market is forming higher lows. Momentum remains strong, and the overall trend continues to point upward. What is the most logical trading decision? Is it A, wait for RSI to hit 70 before buying? B, enter a long trade immediately? C, look for a pullback to the moving averages for entry? Or D, sell now because RSI is high? Think it through. You have 10 seconds to record your answer. Correct answer, C. Look for a pullback to the moving averages for entry. Although the trend remains strong, experienced traders often wait for price to pull back toward dynamic support zones like the 10 MA or 20 MA before entering. This can improve risk management and provide a more strategic entry within the existing uptrend. We've now completed Day 18, Lesson 4. Now you know how to recognize powerful reversal patterns and how indicators like RSI and moving averages can help confirm them. These tools can help traders avoid false signals and make more informed decisions when trends begin to shift. Remember, the more you practice applying these concepts, the more effective and confident you'll become in real market conditions. Understanding ideas is one thing. Applying them consistently is what builds skill. This is why simulators matter. They allow you to practice, make mistakes, and refine your process without risking real capital. In the next lesson, we'll explore how moving averages can act as more than just trend indicators. Ready to test your knowledge? Let's dive into a quick quiz before we move on.
Ready to master trading psychology? Visit marketmindsetuniversity.com, where you'll get free access to Day 0 course videos and see how we teach trading the right way, step by step, with structure and clarity. Practice with purpose and perform with precision. I'm Michelle, and we'll see you in the next lesson.